Afternoon, everyone. Thank you for joining us for today's Small Business Support Workshop, Funding for Your Small Business. Today's workshop is presented in partnership with the City of Boston and Innovation Studio and will be led by Jessica Mello of SEED, as well as Dan Martiniello of the SBA. Take it away.
All right, thank you, and good afternoon, everybody. Thanks for joining us. My name is Dan Martiniello. I work for the SBA as a lender relations specialist here right in Massachusetts. So if you could just bear with me 1 second, because I'm just going to share my screen. I have a presentation here, and we're going to basically go over all of the SBA loan programs, the traditional loan programs that we have. Again, my name is Dan Martiniello. I'm one of the lender relations specialists here at the Massachusetts District Office for the SBA. Here's my contact information. So if anybody needs to reach out to me after the presentation or further down the road, please, as always, feel free to. We're a friendly bunch over at the SBA, and we'll be happy to help answer any questions, as they come up. So today's presentation, we're going to be going over, your need for access to capital and how the SBA helps and how the SBA works with a variety of lending partners and other organizations to help small businesses grow and get the capital that they're seeking for, whatever business purpose that they need. So how does the SBA, help with potential funding? So there's a variety of different loan programs. I know, over the course of the last year, it's been kind of different because obviously we have gone through this pandemic, and everybody's still trying to get back on their feet, and hopefully everybody is gaining some traction in that manner. And the SBA itself really kind of focused on a lot of disaster type of lending due to the pandemic. So we had a lot of new programs that were basically temporary, that were just trying to help a lot of small businesses weather the storm. But the SBA has a variety of loan programs that have been out for some time now that help businesses, whether they're starting out, whether they're growing and expanding. So we're going to go over those today. So we provide SBA-backed loans through a variety of lending partners. We also work with private investors to help small businesses maybe gain access to those sources as well. Also, too, businesses, depending on the industry you're in, especially if you're in certain technology industries, there's opportunities where the SBA works with a variety of federal agencies to provide grant funding for research and development. And then also, we, probably not as well known in the SBA, but the SBA works with a variety of surety bond companies to provide surety bonds for folks that may need surety bonding to either bid on contracts or perform work on contracts. So that's another program that we're really trying to make sure that here in the city of Boston and the state of Massachusetts, that folks know that is an available source to them. And lastly, I didn't put it on this slide, but we'll also go over just a little bit of information on exporting and international trade, because the SBA is all about making sure your small business, can expand to the fullest extent. And that's sometimes, providing your services or a product outside the United States. So if you need a small business loan, whether it's to start a business or expand your business, whatever the case may be, like I said, the SBA works with approved lenders to offer microloans and other SBA-backed loans. Well, what you're going to see with our loan programs that are facilitated through our lending partners, you're always going to find that the terms and conditions are very competitive. Typically, there's lower down payments required, there's flexible overhead requirements, and also there's a variety of opportunities for counseling and education for small businesses, whether that's through our actual lending partners or with the variety of small business resource partners that we partner with as well. So we'll touch upon that here in the presentation. This slide here is just kind of a little bit of an overview of where the SBA kind of fits in within the lending spectrum. So typically, if you're a small business, I know most folks, you probably, you'll first start at the bank, maybe you have a relationship with, or the credit union you have a relationship with, or maybe you seek access to capital through an online lender. So typically what happens is the financial institution that you're working with, they're going to look to see if they can fit, or do your deal, or your, find a way to provide you capital utilizing their own policies and procedures. Okay. And then what happens is if they can't fit it into their own policies and procedures, but they want to still continue to do business with you and help you grow your business, that's where the SBA kind of comes in to play. So we're not typically a direct lender. I know this year has been a little bit different when it comes to disaster type of loans and things like that. But for our three main programs, we're not the direct lender. We're utilizing our lending partners for the direct lending. We just provide the certain programs. So the SBA will provide a certain percentage backing for some of our programs. Anywhere we'll guarantee a loan anywhere from 90% right now, all the way down to 50%. So that's on the lender's behalf. So this helps the lender reduce a little bit of a risk within their loan portfolio to help you as the small business. And also too, the SBA, like I said earlier, provides a wealth of counseling and training and other educational opportunities for small businesses, and mainly facilitated through our resource partners and our lending partners. So here is a list of our three main funding programs. So you have here, you have your 7A loans, your 504 loan program, and your micro loan program. And it's great to have Jess on here today because, Seed Corp is actually a partner with us on both the 504 loan program and the micro loan program. And they are very active here within the state of Massachusetts. So, it's great, that they're, a continued partner, a very active partner, and, they help out their community to the fullest extent. But when it comes to the 7A loan program, this is our most common loan program. So this is the program that you're going to see a lot of our traditional banks, traditional, your credit unions, they probably have some sort of relationship with this program. Now, with 7A loans in general, there are a variety of sub-programs under this wing of things. So what happens is if you go to a lender and the lender decides to take your loan under the 7A wing, they're going to find which program best suits your needs. But there's a variety of reasons why the lender may look to utilize this program, because sometimes if they can't fit it in their conventional lending manner, maybe because their loan policies dictate that they can't lend to new businesses, or maybe the collateral requirements under their lending policies don't allow for it, or maybe it's what type of capital you're asking for is over their lending limit. So this is where the SBA will come into play, because the 7A program can go facilitate loans up to $5 million, and for a variety of business purposes. So whether that's purchasing real estate or purchasing inventory, just general working capital for your day-to-day business expenses, a whole host of different things. A couple things you want to keep in mind in general when it comes to SBA lending. Your lender that you're working with is going to ask you a variety of questions, and this has to do with the requirements that are being asked on behalf of the SBA that wants the lender to make sure that the business is eligible. So just to go over a few eligibility basics, for the main part, when it comes to SBA lending, we are lending to for-profit businesses. There's a few caveats in there for nonprofits, but mostly it's businesses that operate for a profit. Then also too, we have definitions of what's considered a small business. This is something that the lender you're working with would kind of handle and figure out with you. But for the most part, the majority of small businesses, well over 90% of businesses in the United States, are considered small businesses under our definitions. Also too, you have to be located here in the United States. And then, the SBA always wants to make sure that you have some skin in the game, that you've provided some equity into your business as well. And then also too, the lender has to look for or demonstrate that there's an actual need for credit. So they're going to be looking into your business assets and your collateral, and also your personal finances as well, because they want to make sure that if they are going to need assistance from the SBA, which is is federal government, that we're helping businesses that are in true need of an SBA loan enhancement. And one big thing too, it comes to, federal debt. So if you have any sort of federal debt, if it's delinquent, you want to make sure you kind of take care of that prior, to your request for access to capital, especially if it's going to create an issue if the lender you're working with needs to utilize an SBA program, because that's an eligibility concern. But on to the next one, you have 504 loans. This is another great program. Again, this is a program that can facilitate loans up to $5 million. And this is for a long-term financing. This allows for fixed rates. The rates are historically low right now. I think our the 25-year rate right now is just a little over 3%, and the 10-year is under 2.5%. So it's a great program, to take advantage of. Typically, you see deals, this is for businesses who are looking to purchase real estate, or maybe large pieces of equipment or machinery, things like that. This is a little bit of a different financing option too, because you have 3 parties involved. So you have you yourself as a small business, and then you have your certified development company, which is another financial institution that is partnered with the SBA. They're going to take part of the financing project with the SBA's backing, and then you have a third-party lender. So think maybe like a traditional bank per se will also finance a portion of the project as well. So it's your 3 parties versus say a general conventional small business loan or a 7A loan, where it's just you and the specific lender you're working with. And then, lastly, you have micro loans, and I know we'll talk about some of these other programs as well, so I'm not going to dive too deep into it. But our micro loan program, is great, especially for business starting up, or or needing financing for small dollar amounts. So typically this program offers loans up to $50,000. I think the national average on these loans is around $13,000 per se, but this can help your business, whether startup costs. Again, similar to the 7A program, you need, general working capital, purchasing inventory, maybe small pieces of equipment or a vehicle for your business, whatever the case may be, you can utilize it under the micro loan program. And this is a great program too, because all of our intermediaries are micro lenders. We have about 8 or 9 here in the state of Massachusetts. They also provide technical assistance, educational training, and counseling throughout the way. So it's a great opportunity that if you can connect with our micro lenders and do financing through them, you get a whole host of additional counseling and resources provided through these micro lenders. And generally, this is just a slide. I know I went over a couple of things, but when it comes to SBA, backed financing, anything you generally see, when it comes to access to capital and small business lending, and use of proceeds, it generally fits under the SBA. There's not too much that doesn't. So as you can see here, this is just, this isn't the tell-all list, but just some examples. So whether you're purchasing land or real estate, maybe you're exporting a product, or again, you need some working capital for your day-to-day expenses. And just some other things that I just want to touch upon too, when it comes to just small business lending in general and SBA lending in general, you want to make sure that you take the time to have all of your financial paperwork squared away and organized, and all of your business paperwork, and also your personal finances, squared away and organized. Because when you're going to a lender, whoever the lender may be, they're going to want to see records of things. So depending on what stage your business is in, if you're brand new, you might need to supply a business plan, or if you're an established business, you're probably going to need to provide financial statements, things like that. The SBA partners with a variety of resource partners, whether that's the Small Business Development Center, whether that's SCORE or the Center for Women and Enterprise. They can provide assistance and help counsel and train you to make sure that these things are up to par and make sense for the lenders that you're working with. Okay. And this is also, this type of training and counseling and technical assistance is offered through some of our lending partners, like our micro lenders as well. So I always try to make people or try to really emphasize the fact to small businesses that, just because you might be the sole principal of your business, don't think of running your business as a solo mission. Formulate your team. There's a plenty of folks out there that don't necessarily have to be employees of your place, but are willing to help you, the small business owner, succeed. And one way too, when it comes to finding that right lender that can help you with your capital needs, the SBA definitely understands that, it's not always easy, especially when you're starting out as a small business, to try to go into the door of each bank and credit union, other lending types, and try to talk about what your capital needs are and figure out who can help you and who can't help you. So the SBA created a system called Lender Match. So this is basically, like everybody sees those Match.com commercials. This is like Match.com for small business lending. So on SBA.gov, this feature allows you to create a profile and basically talk about your capital needs, also talk about your business, and you can submit that profile. What that does is that profile gets sent out to all of our lending partners that have access to Lender Match. So here in Massachusetts, about 85% of our lending partners have access to Lender Match. So what happens is within a 2 to 3 day time frame, the lenders will be able to look at your profile, see what you submitted, what your capital needs are. And if they want to have a further conversation with you, you'll end up getting an email from the SBA saying X, Y, and Z bank would like to have a further discussion with you. Here is their contact information. Okay. And what's great about that is this helps facilitate a lot of great conversations. Now, a couple of things you want to keep in mind. Just because you utilize this tool does not tie you into any sort of loan product, whether it's an SBA loan program or whether it's a loan program with some lenders you may be in contact with through this. This is just a connection tool only. So it's just to help you, the small business, try to get your needs out to the lending community. And then just to kind of continue on, the importance of creditworthiness and understanding that, there are resource partners out there that can kind of help you, assess your creditworthiness. I'm sure most folks on this call, this is not, new information or anything Dan came up with or the SBA came up with, the 5 C's model and understanding your creditworthiness. So, just keep in mind that these factors are always going to come into play when you're looking for capital, whether you go, it doesn't matter what lender you're going with, they might, different lenders may look at certain things differently, on this spectrum here, but these types of categories are always going to come up. So, when it comes to your character, when it comes to your business, how are you paying your business debts? Is everything on time? How does your credit score look? Those are the things that they're going to be looking at. And then cash flow, if you're asking for additional debt, they're going to be looking at, what's your current debt? What's your current income and revenue? Can you support additional debt? And then the lender you're working with is always going to see what collateral you have available. In case of default on a loan, the lenders typically will like to, try to secure the loan as much as possible. And then capitalizations, the lenders want to know how much have you put into this business? How much risk do you have, financial risk have you put into your own small business? And, how much skin in the game, as people say, and equity. And then conditions, this is probably more important than maybe it was a couple of years ago, right? So because of COVID, market conditions have changed, industry conditions have changed. There's so many things that have changed recently, right? So, and this is why it might be important for you to sit down with counselors, sit down with business advisors and accountants and kind of get a real good understanding of how market conditions and industry conditions have changed due to the pandemic. Even though, we're gradually getting past everything, it still is affecting everybody's business in some form or fashion. So, having a good grasp on that and having answers to a lot of questions that lenders may be asking, that's always, something you need to be aware of as a small business. And then a couple other programs that the SBA is involved in. We partner, with investment companies to help small businesses secure capital through the Small Business Investment Company program. So, with that said, if you have a strong financial performance and promising prospects, this is, something that you can work with through the SBICs to try to, grow and expand your business. So whether that's through connections and expertise in your industry, or business investments through debt or equity, or maybe a combination of both. So, working with the SBICs may be a good opportunity for you. Just keep in mind with this program, typically, these are for more mature small businesses that have, profitable and businesses that, have a clear history of sufficient, cash flow. This isn't for a program that maybe for a business that's just starting out. But, if you want more information on this program, definitely go to SBA.gov. Under the funding programs, go to the investment capital. You can actually look up by state which investment companies are partnered with the SBA on this program, and you can connect with them, to see if there's any opportunity there as well, because they provide loan funding as well. They also provide, equity investment, so they can take a share of your ownership if that's the case. And I know when it comes to their lending, I think you can do anywhere from a few $100,000 to a few million dollars. So there's additional opportunity as well. And then we also have, funding through research and development. So, definitely if you're a small business in certain industries, you definitely can open up some doors with early stage capital through our small business innovation research, SBIR, or the small business technology transfer, the STTR. I know there's so many acronyms here in the SBA and the federal government in general. My head starts spinning after a little while, but, hopefully everybody will get a copy of this presentation, at the end, so you can always review this stuff after and learn the acronyms as well. But with this funding program, if you're a technology focused small business, looking to fund research and development or prototyping operations, you may qualify for federal grants from a variety of different federal agencies partnering in the SBIR and STTR program. So some areas you want to look at if this involves your business, or you're in these industries: artificial intelligence, nanomaterials, clean energy, water filtration, education technology, wearable technology. Again, definitely go to the SBIR.gov. You can see all the grants that are available out there. It's all public information. And also the Massachusetts Small Business Development Centers has specialists that can help you learn more and provide you one-on-one counseling to learn more about these types of opportunities, if this is something that you want to take advantage of. Just for reference, some agencies that are involved in this, you have the Department of Navy, the Department of Education, the Department of Defense, just to name a few of them. And then also we have the Surety Bonds contracting program. So like I was saying earlier, the SBA partners with a variety of surety bonds companies. A lot of times these are insurance companies as well, to help small businesses gain access to surety bonding if need be, to provide, if they need a bid on contracts, or, get performance bonding, whatever the case may be. And with our program, it works kind of similar to our 7A program, where the SBA is providing a guarantee to the surety bond companies. And also there's added flexibility in the amount of paperwork requirement that's typically required for general surety bonds, and also some flexibility on evaluation requirements, because a lot of it is based on the size of the contract that you need the bonding for. But this is another great program. If you go to SBA.gov, you can actually look up all of the surety bond companies in the state of Massachusetts that are involved in this program. I think we have around 25 to 30 or so here in the state of Massachusetts that are active within this program. So if you fit the need for a surety bond, definitely check that out. And then just lastly, I just wanted to touch upon international trade and exporting, because like I said earlier, the SBA wants folks to start their business. They want to grow the business, and they definitely want them to expand their business. And that doesn't mean just selling your service and products here in the United States. So I just wanted to give you a couple highlights about benefits of exporting and international trade. When you look at this slide here, you have nearly 96% of consumers live outside of the United States. That is a lot of people, as we know. And 2/3 of the world's purchasing power is in foreign countries. Well, that's a lot of dough, so that, they're spending their money somewhere, right? On someone else's product and service. So these are things for a small business. If you want to evaluate where you want to take your business, maybe you want to take it to that next step, that next level, the SBA can help you along the way with this as well. So how do we do that? So the SBA partners with the U.S. Export Assistance Centers and also the Small Business Development Centers to provide counseling, training with, through experts that can help, in that field. Also, they have the STEP program, the State Trade Expansion Program, to help you find international buyers. And then we also have in our 7A loan program, how I talked about, there's a lot of sub programs for lenders that may need to help small businesses with certain capital needs for exporting purposes or international trade purposes. There's specific sub-program types for that. So that's why it's very, very important when you're dealing with a lender to be as specific as possible what your true needs are for the capital you're requesting, because they want to make sure that they provide you the best loan program possible for your needs. And then lastly, I'll turn it over to Jess, but I just want to make mention of all of our resource partners. So whether it's SCORE, the Massachusetts Small Business Development Center, Center for Women and Enterprise, the Veterans Business Outreach Center, and some of the other ones we work with. We also, at the SBA, even though we're not direct partners, but we work with the city, the local cities, towns, other small business organizations, chambers, to try to make sure that, we're all in the same, have the same purpose of trying to help you, the small business owner. So, we want to make sure that you get the technical assistance you need, the training you need, and other tools you may need, along the way. So please feel free to connect with any of these resource partners, that you see here. I have all the links, and you'll get a copy of the presentation. And then, I have questions, but I don't know if we want to just take that until after Jess is done, or how we want to do that.
We can take 5 minutes for you to answer some questions, and then Jess can pop in.
Sure.
Yvette, go ahead.
I have a quick question. You mentioned about exporting. Is there information about importing your product?
Or you cut out, Yvette, you cut out a little bit there at the end. Did you say you're looking for information about exporting?
No, I'm asking you. So you mentioned information about exporting, and I wanted to know, is there information about importing available and kind of like manufacturing? Is there anything like that brought up?
That would be something that you definitely want to reach out to our resource partners, because what's good about our resource partners is there's a lot of representatives from a variety of different backgrounds. Okay, so like we don't have any importing program per se in the SBA, but our resource partners, like say SCORE, for instance, you have a lot of former business owners, you have a lot of former accountants, attorneys, bankers that are all out helping the small business community. So if you connect with them, they actually have a listing of each representative's background. So there might be someone there to talk to about, information, regarding that.
Okay, thank you.
You're welcome.
I've just had a question. Can you give a little bit more information on the micro loans, the prerequisites for companies versus going directly to a 7A? Majority of startups probably do the micro. Can you give me more information on that?
Yeah, sure. And I know Jess is probably going to touch a little bit upon that herself. So, I won't dive too deep into it. But with our micro loan program, so these are small dollar loans, upwards of $50,000. For the most part, the micro lenders, the intermediaries, they're going to assess whether you're eligible or not, utilizing their own loan policies and procedures. So, even though, the SBA dictates a few things, such as, just making sure that, they're operating for a profit. But with the microloan program, there is a caveat with nonprofit daycares. You can still be eligible, but each intermediary has their own loan policies and procedures. So the one that you're working with, they'll kind of make that assessment. There's no guarantee. So we actually lend money to the intermediaries to then lend out to the community. But they make the decisions on a case-by-case basis. So whereas, say, the 7A loan program, the lender will be assessing, what program they want to put you under the 7A loan program. But sometimes they have to ask the SBA for approval, and other times they're making the approval on SBA's behalf. The intermediary is just going to be making the approvals on SBA behalf for all these loans, because we actually provide them the money on a basically a yearly basis, and they make the decisions on their own. So it's more of a one-on-one decision where the SBA is not too involved in the overall decision making.
Okay, thank you. I'm also a veteran, so the VBOC, is that supplemental, or is that the same program?
What program did you say? Did you mention?
I'm a veteran, so I was
Yeah.
looking at information in the VBOC.
Oh yeah, so the Veteran Business Outreach Center, so they're a resource partner. So they're tasked with just helping you as a veteran small business owner, with a variety of assistance. So whether you just need some one-on-one counseling, maybe you need help with squaring away your financial statements, maybe you need help with some marketing advice, things like that, that you would have every day, or maybe you need help with clearing up some, day-to-day operational, issues. That's what they're tasked with helping you with. They also provide a variety of different trainings throughout the year. So maybe you want to get additional training on some financial platforms, like Toast, if depending on the type of business you're in, or maybe an accounting platform, those are the types of things that they can provide assistance on.
Thank you, Dan. There are a few more questions, but we'll save them to the end of the class so we can get to Jessica's presentation.
Hello, everybody. I'm Jessica from Seed Corporation. So we work very closely with the SBA and Dan, and just like Dan said, the SBA has these funds that they want to get out to business owners like yourselves, and companies and organizations like Seed, or how they move those funds out to entrepreneurs. So I'm going to talk a little bit more about the lending side, but of course, happy to answer any questions as they come up. This is basically just the basics of borrowing money for your business from the point of view of a lender. And these are the different services that Seed does offer. So outside of the financing, and you have a list of the programs there that I'll talk about, we also provide business assistance. We do that in the form of monthly workshops. So every month we will hold 2 workshops. One is business fundamentals. So we talk a lot about owning a business, operating a business, different considerations to make, like marketing, management, training, putting together a business plan, getting financing, all those things that anybody looking to open a business or grow an existing business just kind of has to know as they move through the process. And then the second workshop that we offer is business financials. So in that workshop, we focus mainly on understanding business financials, so profit and loss statements, balance sheets, all that fun accounting stuff that nobody really goes into business to do, but is no less a part of the journey. We find that a lot of people will go into business because they have a passion or a talent for something, or they see a need in the community. That accounting, know-how kind of comes after it. So we have those workshops to hopefully prepare people to run their businesses independently, and just kind of get them ready. But the first thing that I want to talk about is the SBA Micro Loan. The SBA Micro Loan is probably the startup loan. It's usually used for startup businesses, but existing businesses can use them as well. This loan goes up to $50,000. And at Seed, we'll look at up to 6 years for the term of the loan at a 5 to 6% interest rate fixed. So normally, if we're doing the loan independently, it's 6% fixed. That's your interest rate. And that'll be the interest rate for the life of the loan. It's what you sign for the day that you close the loan. It's what it is at the end of the term. The only time we would go down to 5% for this program is if we were partnering with another lender on the project. So if you are looking to do a lending project with your local bank as well as seed and we were partnering, we would drop the rate down to 5%. But normally I tell people 6-year term at 6% is that's pretty much the standard. There's also no prepayment penalty for this program. So if you decided that you are taking out a $10,000 loan, you don't want to see it through for the whole term because you want to save yourself some interest, you can pay that loan off at any point and you won't be penalized. You won't be hit with any fees for that. Like I said, this program is available for startup or existing businesses. If you are a startup, what we would need to see along with this type of application is a business plan. We want to know, what you project the business can make in that first year. If you're aware of the expenses that the business will incur, if you have a marketing strategy, what your employee strategy is going to be. Is it just going to be you to start? Are you going to hire people? And that is something that you want to refer back to that list of resources that Dan provided. If you're working on putting together a business plan and you aren't really sure about what should be in there, how much or how little detail to provide, call up CWE, Small Business Development Center, VBOC, SCORE is a great resource. All these people can help you put together that plan so that you hopefully can take it to a lender and use it to get the money that you need. It's been mentioned already, but these resources are free and confidential to use. Your tax dollars pay for them. So I always recommend that you at least have a conversation with one of the resources just to see if there's something that they maybe can help you with. As far as the use of funds for the program, you can use the money for a lot of different things: working capital, small pieces of equipment, furniture. You can refinance business credit card debt that you might have incurred as you started up the business. You can purchase inventory. There really aren't too many things that you can't do with a microloan. So that's why, a lot of startup businesses will use them. It's very flexible. And the last bullet I have here is bank decline. So when we're looking at loan applications, and this is true for any CDC, which is a certified development company, using SBA funds and SBA programs, we always want to make sure that you've visited the bank first, your bank or credit union, just to see if they're able to do the financing. The first reason is that we're not here to compete with banks. We're really here to provide a resource for business owners who aren't able to get traditional financing. That's what we do as a nonprofit lender. The second reason is that if you're looking for business financing, it's a great idea to go to the bank first, because having a banking relationship as a business owner is only going to help you down the line. If you are looking for, that first $50,000 just to get you going, and you can take that out of a bank or a credit union, you've now established a relationship. So maybe 5-10 years from now, when you go back to the bank saying, I'm looking for a commercial real estate loan, I want to buy my building, they know that you're a good borrower, they've worked with you. It just adds to your credibility. So always go to the bank first. Does not have to be a formal decline letter or anything like that. Have the conversation, see what the feedback is, and then at that point, give us a call and we'll see what we can do. Within the microloan program, we have the fast track loan. This is a loan up to $20,000, and it's a quicker approval turnaround time because this is something that we approve in-house. So the process is just a little bit faster than something, say, 20 to 50,000. There's no application fee for this particular program. And also in a situation like this, we actually don't need to see a bank decline. A lot of banks aren't going to be able to do a loan as small as 20,000 or less. Banks will usually refer those to us anyway. So we have this as an option for somebody who truly is getting started or in business already and doesn't need a ton of money. Maybe they just need a little something to purchase more inventory, just get them through a tough year, whatever it is. And I know that, having just come out of a tough year last year, a lot of businesses were struggling because of COVID. This program is very popular because it's not, no one's borrowing a ton of debt. It's something to get them going, get them through. And we're always happy to talk about what you think your needs are as well. The resource partners are great for that too. If you are really not sure how much you should be looking at for financing, doesn't hurt to ask, and it's not going to hurt your application chances if you're talking to us and just disclosing that, letting us know that, it could be 20, it could be 30. You just need some help kind of nailing it down. Seed's small loan program is loans anywhere from 50 to 250,000. The terms can be a little bit longer for this particular program. and the rates are pretty much the same. Like I said, if we're partnering with another lender, the rate would be 5%. If it's solely seed providing the financing, it will be 6%. And just like the microloan program, there is no prepayment penalty for this program. So if people do want to pay down on the balance, or they want to finish up the loan a little bit earlier ahead of schedule.
Jessica, there's a quick question from
Sure.
Tony in the chat. What is the interest rate fast on track loan?
So the interest rate for the fast track loan, because it's just a microloan, is the same. It'll be 6% for a term up to 6 years, but normally for smaller amounts, we can bring the term down anyway. But that's just another form of microloan. Thank you.
Thank you.
So the small loan program, more often than not, this will be done in partnership with a bank. It can be used for small real estate purchases, larger equipment, whatever it is. If you are somebody who has a bank or credit union that you do all your business banking with, you have a strong relationship with them, and you are interested in SBA financing, talk to the bank first, see if they are willing to partner with Seed or a CDC like Seed, and start the conversation there. We're always happy to chat with banks. So many of the banks in the area do use these programs, and we have relationships with a lot of them. They have relationships with SBA as well. The banks seem to like the SBA programs because it does mitigate the risk on their side. So I don't think of it as a competition. It's really something where we have a relationship with these people. We can come together to hopefully bring you a better deal and a better product. And the last program that I'm going to talk about as far as standard SBA programs is the SBA 504 loan program. These loans are used for purchasing any kind of commercial real estate, large pieces of machinery and equipment. Dan touched a little bit on this right now, but for a normal commercial real estate project, you would probably be expected to put down about 30% with the bank or credit union. For these projects, what will happen is the bank will provide 50% of the financing. Seed or the CDC involved will provide 40% of the financing, and you as a borrower could end up with just a 10% injection. The injection can vary depending on some different factors, usually just factors regarding the property, but that's kind of something that you would have to, it would be case by case. But the program is really great that you can buy that real estate with a small injection and get a fixed rate for 20 or 25 years for commercial real estate. For the machinery and equipment, you can look at a 10-year term with a fixed rate. And like Dan said, the 25-year rate right now is 3.04, I believe. The 20-year rate fell below 3% again this month. So the rates have never been lower, and it's a great time to take advantage of the program. I always like to let people know that this is something for a business owner to own a building that their business is going to operate in. This isn't something that we use for any kind of flipping houses or investment properties. The mission of the SBA and the mission of CDCs like Seed is to strengthen the regional economy by helping out businesses and business owners. So we want to create jobs. We want to make sure that if we're making a loan that's being used to purchase commercial real estate, it's going to be used for a business and a building, not for collecting rent or just buying and selling that building at a higher price. So the real estate has to be 51% or more owner occupied. And within this program, you also have the option to refinance existing business debt. So I won't say too much more about this because it is so case by case, but it's a great option to take advantage of if you are on the market for commercial real estate that you want to house your business in. So Dan mentioned in his presentation the 5 C's of credibility. I'm going to go through them just a little bit more from the perspective of a lender. When you're going for financing, whether it's SBA or traditional, everyone is going to use pretty much the same metrics. And the first thing they're going to look at is cash flow. Cash flow is just how we determine if you can pay a loan back. So when we're assessing a borrower's ability to repay a loan, we're looking for a 1-to-1 cash flow ratio. And all that means is that for every dollar going out, we want to see a dollar coming in. It's, as far as on the lending side, this is how we're going to determine if globally you have more money coming in than what you have going out between your personal bills and your business expenses. And normally, if we can show that the cash flow works, it really does strengthen a loan application. It's something that the resource partners can help you with, when you're building your projections, trying to figure out, what to spend that year. So I would recommend that if you haven't had any assistance in putting together a cash flow projection, definitely speak with somebody about putting that together. And if there are any questions on cash flow, I'm happy to take them at the end. I'm going to go over just the rest of the C's first. So credit is the next one. This just refers to your credit score. We are running personal credit instead of business. And we're looking for scores 600 or higher. When we're looking at a borrower's credit history, as I said, cash flow is how we determine, can you pay back the loan? We're looking at the credit history to determine, have you paid back loans in the past? If somebody has been a good borrower in the past, chances are that trend is going to continue. And if somebody has either struggled to pay loans in the past or has, a lot of disputes where they've decided they don't want to pay debt that they've incurred, then as lenders, we need more explanation on that. We want to make sure that that's not a character flaw, but rather, there was something legitimate that maybe you weren't able to pay your bills, whether it was a medical situation, a divorce, being out of work for some time, whatever it is. This is what we're looking at when we're looking at credit. And I always like to make the distinction between having a lack of credit and poor credit. If you find that you're somebody that doesn't have a great credit score, but you've never had any late payments, it might just be because there isn't enough history there. So I always recommend to start working on building up your credit, even if it's just paying off a little bit of debt every month. Just do what you can do, and hopefully the score will kind of come up as you go. Because we're an SBA lender, if there's been a bankruptcy in the past, we do need to see that it's been discharged for at least 5 years. And if anybody is interested in any credit repair services, I always recommend the American Credit Counseling Service. They're a nonprofit organization that will help you repair your credit and counsel you for free. And again, it's confidential. The next C of creditworthiness is collateral. Collateral is how we secure our loans. So as an SBA lender, we usually like to take a position on a home or a property in order to secure the loan. If there's no property available, we can look at up to 10 to 15,000 unsecured, 20 in some cases if it's an existing business with a strong financial picture. But the other options we have is looking at a guarantor outside of the business, could be a parent or a spouse, something like that. And if there is no collateral available, you can look into that 7A Community Advantage loan that Dan talked about earlier. Contribution, we've talked a little bit about it already, but contribution from a lending perspective is just how much is this borrower putting in of their own money to get this business going or to grow this business. Normally, we say 25% contribution for a startup business is good. It changes case by case, because if we're working with somebody who has been working on this business, for a year to get it going, and they've already invested thousands of dollars into doing that, whether it was from legal counsel or marketing, whatever it is, we'll count that as your contribution, because we have to give you credit for that, and it is something that you put into the business, that skin in the game that we discussed. So for an existing business, a little bit different. We won't necessarily look for that 25% contribution, but we will look to see what you do have in the business. So contribution changes depending on the borrower, depending on the lending institution, but just know that more often than not, you will be asked by a lender to contribute something. Character is kind of a simple one. So all I tell people with character is that if you're working with a lender, always make sure that you're being as open and honest as possible. If there are, credit blips in the past, just be upfront about it. If there are different, some details about the business that maybe you think we should know about, just offer up the information as soon as you can, because normally a lender is going to be reviewing your application and then going to either their director or their loan review committee, and they're going to be an advocate for you. And the more complete picture that we can have, the better. We have to tell the story of the business. We have to, make a case for why this business deserves financing. And how we do that is, by being able to say that you've been open and honest with us, you've given us everything we asked for. If you've been good to work with through the loan process, then chances are it'll be a good lender-borrower relationship going forward. And the last C that I have is a condition, like Dan mentioned. So the condition of the economy at the time that the loan is being made, or at the time the business is taking a step forward. This is going to be different depending on the industry. but I don't think I need to give anybody many examples after, everything with COVID. Economic trends and different, global events can affect a business's success. And what we want to see is that either you've built into the business plan how you plan on combating any hurdles that come your way, or that you've allowed for, for example, last year, if your business was cut down as far as the capacity you could have in a restaurant or in your nightclub, whatever it is, we want to make sure that those considerations have been built into your projections and that you're aware of the toll it could take on the business. So just some quickly required documents if you do plan on going for financing. If you're a startup, you will need to have that business plan. For an existing business, just a simple business description is fine. Always be aware of exactly how much money you're looking to get and what it's going to be used for. If you're not aware of it, that's okay. Just have the conversation ahead of time with the lender prior to submitting a formal application. And if you have requested financing from other institutions and they've declined you, just be upfront about it. Tell the CDC or the lender that you're working with why you were declined. In a lot of cases, that's just going to help us check off that particular eligibility box. If you were declined by the bank because you've not been in business long enough, or because your credit fell below their typical guidelines, that's okay. We do need to know. And again, just giving us as much detail as possible makes our job easier, makes it easier for us to push the loan through more quickly. A personal financial statement is a document that we get from the SBA that essentially is a balance sheet for your personal finances. So in one column, you'll put everything that you own, and the other column, everything you owe. All we're trying to do with this is just figure out what your net worth is as an individual and take into consideration, how your existing debts will affect your ability to pay any business debts. Providing financials for an existing business is really just as simple as giving us a year-to-date profit and loss statement or an income statement, as is on the slide, and a balance sheet. So the income statement just shows all the money that you've made up to that point. The balance sheet shows everything that the business has to its name, along with every liability it has. So, what you own versus what you owe again. And then also the past 2 years of your federal tax returns, just so that we have a history to go off of when we're kind of sensitizing those projections. For a startup business, we want to see a projected income statement, and we understand that any projection is going to be an estimated guess at the end of the day. So don't worry about it being perfect. Your lender is probably going to sensitize it anyway. A day one balance sheet, which is just a representation of everything that the business owns on day one and everything that it owes again, and a 12-month cash flow projection. So the difference between a cash flow projection and a projected income statement is that the projected income statement will project your year-end numbers. So everything you've made alongside every expense that you had in the year to give you your net profit. The 12-month cash flow projection actually breaks all that down month by month and shows everything you make in the month along with monthly expenses. The reason that we ask for the 12-month projection is because a lot of businesses do have some seasonality to them. It's not going to be the same revenue and the same expense every single month. So we want to see just how the business works, how your cash flow works, and we'll use that in our financial analysis as well. And as far as the lending programs and putting together a financial application, that's pretty much all I have for you. So I would love to hear some of your questions.
Thank you so much, Jessica. Anyone, if you have any questions, please feel free to just unmute, ask your question, or raise your hand, and I can call on you.
I did see a question before about student loans, and if having student loans disqualifies you from financing. I do want to say it doesn't. Student loans are something that a lot of people have, and especially if somebody is applying for a business loan when they're a little bit younger, maybe closer to that graduation point, then we do understand that people will have student loans that they'll have to pay. As long as you have not defaulted on any student loans, because that's federal debt, it should be fine. When we're looking at you as an individual and kind of assessing your net worth, we do expect that student loans will pretty often bring somebody's net worth into the negatives, and that's okay, because again, we understand that your student loans not only is it very common, but it could very well have been a part of actually making you able to open the business. If you had to go to school for a particular degree to be able to open your business, if you're opening a daycare center, then of course you have to have an educational background in childcare. Don't let that dissuade you from applying. Disclose upfront, what you pay per month for your student loans so that we can work it into the cash flow. But certainly don't think that you can't apply for a business loan simply because you're still paying those off.
Russell, feel free to unmute yourself and ask your question. And then Tony, you can ask your question next.
Yes, hi. Thank you for today's hosting. It's really been learning experience. My specific situation is I'm now just formulated my company and I'm obtaining EIN number, and I'm going to go and open up my business account. What I'm looking at doing is I have a new invention patent that I'm looking at the crowdfunding. Is that me doing that? I'm looking at doing a crowdfunding campaign. So I'm looking at taking a micro loan to get a crowdfunding campaign and start with the manufacturer to produce those pre-sales. So I would need a little bit of a staff. I would need a budget for a crowdfunding campaign on Kickstarter or Indiegogo. I don't know if you're familiar with those, but then I'm looking to have a contractor that's going to be able to manufacture the pre-sales, the demand that's being made off of that. So would I be able to just request a micro loan to be able to do that?
Yes, we've worked. So I actually have worked with somebody in the past who created a product, and they were looking for the money to get the manufacturing up and going. If you have any kind of prototype of your product, that's really helpful. And if you have something where you can kind of show or make a case for the demand, that's helpful as well. Because when we're looking at your projections for how much money you need to start manufacturing, to start crowdfunding, a part of that is going to be obviously the cost to manufacture the product and how much you feel you can sell the product for. We want to make sure that all that makes sense. So that would be fine. That would be, it's a more complicated situation than just grabbing a working capital loan because we have to break everything down. But that's no problem as long as you have all the information that we would need to see. It shouldn't be a problem. And if your patent is pending, we would just want to see that documentation as well.
Yes, definitely. That's where I'm at right now. So definitely I look forward to speaking with you.
Great, thank you.
Tony, I think you had a question. You can unmute.
Sure.
You can mute again.
Yes, thank you for taking the question. Is Seed a intermediary, or is it? I'm not exactly sure. I just wanted to try to better understand Seed. Is it?
Yeah.
Is so? And then the second question I had is in regards to real estate acquisition. I know it was stated that a business entity can purchase its own real estate to house its operations or its physical location, but could someone clarify real estate acquisition, development, and sales? Because that's my interest.
Sure.
Thank you.
Sure. So to answer your first question, Seed is an intermediary lender. We're an intermediary lender for the SBA. So we're strictly doing the term loans. We don't hold any accounts. We don't have any lines of credit. We're really here just to kind of move the money from the Small Business Administration to the business owners. That's what we do. And if you go on to SBA.gov, they do have a tab where you can look for local assistance and find a list of intermediaries in the area. And to answer your second question regarding real estate, yes, if we're looking at a real estate acquisition, so buying a building, buying a property, the land on the property, we just need to see that purchase is going to be that building is going to be 51% or more owner occupied, which means at least at least 51% of the space is going to be taken up by the business that purchased that space. So it can be, if your company, if you have a holding company for your real estate, that's fine. But you as the borrower would have to be the business as well, if that makes sense. So I don't know if your question is based on how you're legally structured, being a corporation or a sole proprietorship. But the main thing is that we're not allowed to do any speculative lending. So anytime we think that somebody is looking to buy a building to then either sell it for a higher price or just to bring in people to be tenants in that building, whether it's commercial tenants or residential, that's not something we're able to do.
Okay, all right.
The SBA is not looking for like a business company like an LLC to buy, say, like a mall, and then have all the tenants. You have Bed Bath & Beyond, Sears and all that be your tenants, and the LLC themselves doesn't actually have any sort of operation in that particular facility. So, if you're a manufacturer and you're looking to buy a building or whatnot, you want to make sure that you're the primary operation in that stated building that you're trying to finance.
Okay, understood. And is Seed a local entity? I mean, within the greater Boston area?
We are. Yeah, we're located in Taunton. And we cover all of Massachusetts and Rhode Island.
We'll take one more question from Chikara, and then, in interest of everyone's time, please feel free to email Jessica and Dan. So Chikara's question is, if the bank denies you, basically, can Seed still help you get funding or help build credit to get funding later?
Yes, if you are denied by the bank, then you can come to Seed and we can look at the application. Of course, it's, we would have to do our own review of the application. But if you've been denied by a bank, chances are the bank has just a different set of guidelines than we do. So absolutely, if you find that you weren't able to get money from the credit unions or the banks, come to Seed. And as far as, building credit, we will run your credit to be sure that it's within our guidelines. If we find that it falls below, I'll always refer to that American Credit Counseling Service because they do a great job. They're also a local resource. They're actually out of Plainville, Mass. So if anybody is interested in that service, feel free to get in touch with me after. Send me an email. I can send you the contact information for the woman that I usually work with over there.
Thank you so much, Jessica. And thank you everyone for joining and feeling comfortable to ask these questions. As mentioned, money can be overwhelming and scary, but that's what Jessica and Dan were here for. So thank you so much, Jessica, and thank you so much, Dan. We really appreciate your time as well as you sharing your expertise with us. Have a great afternoon, everyone. Please go get some sunshine for me. I have quite a few Zooms today.
Everybody.
Thank you.
Bye.